Welcome to this video about the potential recession that may occur in 2023. In this video, we will be discussing the reasons for this predicted recession, the potential impact on the economy and individuals, and what steps can be taken to prepare for such an event. Part 1. What is a recession? Before we dive into the details, it's essential to understand what a recession is. A recession is a significant decline in economic activity that lasts for an extended period, typically 2 consecutive quarters. During a recession, businesses may fail, unemployment rates may rise, and the stock market may experience significant drops. Part 2. Reasons for the predicted recession in 2023. Experts predict that there may be a recession in 2023 due to several reasons. The first reason is the pandemic. While we have made significant progress in controlling the spread of COVID-19, its economic effects will linger. The pandemic has caused significant disruptions in the global supply chain, leading to a shortage of goods and services. It has also resulted in job losses and business closures. The second reason is the global debt crisis. Many countries have borrowed large amounts of money to fund their economies during the pandemic. As these debts continue to increase, they may become unsustainable, leading to a financial crisis. The third reason is the potential for rising inflation. As economies recover from the pandemic, demand for goods and services may increase, leading to rising prices. Inflation may also be caused by supply chain disruptions and rising commodity prices. Part 3. Potential impact of a recession on the economy and individuals. The impact of a recession can be far-reaching, affecting both the economy and individuals. During a recession, businesses may struggle to stay afloat, leading to job losses and pay cuts. This, in turn, may lead to a decrease in consumer spending, further exacerbating the recession. The stock market may also experience significant drops, causing investors to lose money. Individuals may find it challenging to make ends meet during a recession. They may struggle to find employment or be forced to accept lower-paying jobs. Those who have invested in the stock market may lose significant amounts of money. Part 4. Steps to prepare for a retreat. While we cannot predict with certainty whether a recession will occur in 2023, it is always wise to be prepared. Here are some steps you can take to prepare for a potential recession. 1. Build an emergency fund. Having an emergency fund can help you weather a financial storm. Aim to save at least 3 to 6 months' worth of living expenses in an easily accessible account. 2. Pay off debt. Paying off high-interest debt can help reduce your monthly expenses and give you more financial flexibility during a recession. 3. Diversify your investments. If you have invested in the stock market, consider diversifying your portfolio. This can help reduce your risk and protect you against significant losses. 4. Look for ways to increase your income. Consider taking on a side hustle or learning new skills that can help you earn more money. 5. Stay informed. Keep up to date with the latest economic news and trends. This can help you make informed decisions about your finances and investments. Part 5. Government responses to a recession. During a recession, governments often respond by implementing policies to stimulate the economy. One of the most common measures is to lower interest rates. When interest rates are lowered, it becomes cheaper to borrow money, leading to increased spending and investment. Another policy response is fiscal stimulus. This involves the government increasing spending or cutting taxes to stimulate economic activity. For example, during the 2008 recession, the U.S. government implemented a $787 billion stimulus package to help boost the economy. Governments may also implement regulations to prevent further economic downturns. For example, they may require banks to hold more capital to reduce the risk of bank failures, which can lead to an economic crisis. Part 6. Lessons learned from past sessions. While every recession is different, there are some lessons we can learn from past recessions. One lesson is the importance of diversification. Diversifying your investments can help protect you against significant losses if one sector of the economy experiences a downturn. Another lesson is the importance of having an emergency fund. During a recession, unexpected expenses can rise, and having an emergency fund can help you weather the storm. It's also important to note that during a recession, it's essential to avoid panic selling. Selling your investments during a downturn can lead to significant losses, and it's often better to wait until the market recovers. Finally, it's essential to be flexible during a recession. This may mean taking on a lower-paying job or reducing your expenses to make ends meet. In conclusion, a potential recession in 2023 is a cause for concern. The pandemic, the global debt crisis, and rising inflation are all factors that could lead to a significant economic downturn. However, by understanding what a recession is, the potential reasons for one, and the impact it can have on the economy and individuals, you can take steps to prepare for a potential recession. Building an emergency fund, paying off debt, diversifying your investments, and increasing your income are all steps you can take to protect your finances. It's also essential to stay informed and be flexible during a recession. While we cannot predict with certainty whether a recession will occur in 2023, by taking these steps, you can give yourself peace of mind and protect yourself and your finances during uncertain times. Thank you for watching this video on the warning for a potential recession in 2023. We hope that the information provided has been helpful in understanding what a recession is, the potential reasons for one, and the impact it can have on the economy and individuals. Remember, it's essential to take proactive steps to prepare for a potential recession, such as building an emergency fund, paying off debt, diversifying your investments, and increasing your income. Additionally, it's important to stay informed and be flexible during a recession. We cannot predict the future, but by taking these steps, you can protect yourself and your finances during uncertain times. We encourage you to share this video with your friends and family to help spread awareness and encourage others to prepare for potential economic downturns. Thank you again for watching.